You've been told before about the housing market crash, probably on multiple separate occasions, and you've probably also thought to yourself, what crash, where is it? And that's for good reason. Many other people out there are adamantly defending their position that the housing market is totally fine after all. But what these people are relying on is you not digging deeper, not looking for and seeking out the actual data to suggest where these markets are going to go from here, because when you do open your eyes, suddenly everything becomes visible. Now, we're all aware of what happened to housing prices following COVID. They exploded upwards due to a load of different effects that I don't want to waste your time thinking about. According to the St. Louis Federal Reserve, the average sale price for a house was $375,000 in 2020, but by the end of 2022, it had risen to $550,000, a rise of 46% over the course of just 2 years, the largest increase in American history. And then the rest of the data supports this idea too, with the Case-Shiller US National Home Price Index rising from 210 to 310 over the same time period, a rise of 48%. And now all the data shows that house prices have been falling and steadily every month for 5 months in a row. The St. Louis Fed only releases data each quarter, but that shows that prices are down by just over 2%, and the Case-Shiller is updated monthly and shows prices have now fallen by 4.5%. A slightly worrying figure, but not exactly the crash that you've been warned about so many times. Prices down by 5% over half a year is hardly the 2006 global financial crisis all over again, and actually there seems to be many analysts out there claiming that the housing market isn't going to crash at all, with Forbes making bold statements like, if you were hoping for a major downturn to snag a cheaper home, think again, and what's more likely is a gradual slowdown in the pace of price appreciation where home prices continue growing, just not as fast as they are now. So where does this disconnect come from, and where is this housing market collapse? And if you want to know what's actually going to happen in the markets, how can you learn to predict these events? Well, for that, keep an eye out for my new course, Stoic Financial Freedom, later on. Now, if you live outside a city in a less dense area, perhaps in a state like Wyoming or Dakota, then there's a serious chance you haven't noticed house prices fall at all over recent months, because they haven't really. Housing prices in Wyoming have fallen by 0.2% so far this year, which is hardly noticeable at all. And this is a trend seen in most rural areas across the United States. The reason behind it is simple. These areas never saw as large a rising house prices in the first place because they're, simply put, less popular. But a surprising amount of Americans actually live in areas like this. We know that people group together in cities and that's where the densest populations are found, but hundreds of millions of Americans live in rural areas that never saw this massive appreciation, which means millions of homes never reached those insanely bubbly prices, and so they're not suffering the blowback now the crash has started. And that's the real secret here. The crash has actually started, and it's only just getting into full swing. It's just these more rural areas are so far not declining by much, and they're helping to hold the averages up. If you look at the average house price of literally any city in the US today, all of them have decreased over recent months, and by much more than 1%. And the only reason I know this to be true is because I spent hours looking through data trying to find a city where housing prices had actually continued to rise in value for this video, and I literally couldn't find a single one. The closest I came was with New York, where prices peaked at $835,000 and have now fallen to $785,000, a fall of only 6%. Pretty much every other city I looked at had performed far worse than that though. LA down from 1.05 million to 0.92 million. That's a negative 12% performance. Las Vegas down from 435k to 385. That's minus 11%. And Boise, Idaho falling from 585,000 to 480,000, a drop of 18%. Even smaller, less popular cities that you probably didn't even realize were crashing are falling drastically. Little Rock's down from 255 to 222,000, a drop of 12%, and Omaha's down from 270 to 235, a drop of 13%. Almost every single city out there has seen house prices fall by over 10% in the space of not even a full year, but somehow the data coming out the government says it isn't that bad, while the data coming from public sources, like the companies actually listing those homes for sale, well, they say it's absolutely awful. But here's the thing, it's incredibly rare for us to even know what data to pay attention to these days, because our financial world is designed to obfuscate and hide the reality from us. This can make it incredibly difficult to make money while investing. Just take a look at all these other YouTube investors over the last year, and they were all obsessed with stocks like Tesla, Palantir, and Fiverr, even as they all plummeted in value. But thankfully, the digital age means it's easier than ever to find the important data that can help you make life-changing returns if you know where to look. I've done literally just that over the last year. I sold out of American equities in December of 2021, just 2 weeks away from the absolute peak, and I made 30% on my investments over 2022 buying energy stocks and staying far away from the hype of tech stocks and crypto. And I've now created Stoic Financial Freedom, a framework and course to give back and show you how to invest like I do. You'll get access to over 50 individual lessons revealing to you how the world really works, how markets and risk determine your wealth, and how emotions are the one thing holding most people back. But most importantly, you'll learn how financial stoicism solves this problem. On top of the exclusive content, you get VIP access to our Discord and the ability to speak to myself and hundreds other like me, to hone your investing skills and build your own wealth, and a bunch of other benefits. And as a special thank you to the viewers who helped me build Stoic Finance all these years, we've put together a condensed version of the course tailored specifically towards investors and my subscribers at a fraction of the full price. So click below to learn more and join Stoic Financial Freedom. But here's the other major problem with this idea that the housing market crash isn't going to happen. We actually have a distorted memory of what the last housing market crash looked like. We think of the word crash and instantly panic and think it means a 50% decline in prices over the course of a single month. But we forget the last housing market crash started in 2006 and didn't stop until 2012, an entire 6 years later. And during that entire 6-year period, housing prices fell from 184 on the Case-Shiller index down to 134, a decrease of 27%. And during that first year of the crash, from the peak in July 2006 to July 2007, prices only fell by about 1.7%. And yet here we sit today with the exact same measure of housing prices published by the St. Louis Federal Reserve and the American government, saying that prices have fallen by 4.5% over the last 6 months alone. And then, of course, we have to consider the fact that the federal government is probably lying about those figures. We know they do it on a frequent basis when it suits them. They have countless times changed the way they measure inflation to try and get lower readings. And literally just last year, the Biden administration tried to change the definition of a recession so they could claim America wasn't in one. So how bad does a private company with no reason whatsoever to lie about falling house prices say about the average price across America today? Well, they say the average price peaked in May 2022 at $433,000, and today, just 9 months later, the average price is $383,000, a decline of 11.6% over 9 months. This crash is so far accelerating far quicker than the one that caused the global financial crisis, and if you think it isn't, then you clearly haven't looked at the actual data. Now, the truth about this housing market crash is that it's only going to get worse from here out, and prices are going to continue to fall at a very dangerous rate. You've likely seen many articles claiming that things are actually okay, that prices aren't crashing as badly as they could be, and that we can see the light at the end of the tunnel, but this is actually expected when we see a bubble on this scale. This graph has become infamous for accurately depicting each of the main stages of a bubble, and right now we are witnessing the return to normal part, not only with housing but with the rest of the markets too. Over the last few months, we had a couple low inflation readings and some soft words from the Fed that caused millions of investors to rejoice and claim that the recession has been averted and a bull market had started once more. But over the last 6 weeks, inflation has come in hotter than they said it would, the Fed has continued to hike rates, and the recession is all but guaranteed again. These people claiming all is well might as well have returned to normal written on their foreheads, because this is the narrative they've been pushing, but that narrative just fell apart. The bubble has ended, it is over, or at the very least, it has started the process of ending. We are in store for a very hard few years where everyone is poorer and getting a positive return on any investment seems nigh on impossible. And central to all this, just like it was back in 2008, is the housing market bubble that is collapsing underneath us as we speak. And it's not even like the rest of the world is a safe haven from this crash and will survive unscathed. Some countries like New Zealand and Canada had even greater bubbles than the US, and even those that didn't explode by quite as much over COVID like the UK are now getting data in showing that housing is crashing at a rate we haven't seen in years. Housing affordability has literally never been lower at a time where people are about to get drastically poorer. Mortgage applications have dropped off a cliff far lower than they ever were during the global financial crisis, and they just keep on falling. And homes in cities all over the world, just like Phoenix, are seeing prices come crashing down back to their fair market values, as this entire bubble was fueled by one thing: cheap debt, and that cheap debt is gone and it's not coming back If you want to learn how to identify these trends before it's too late so you can actually capitalize on these awful market conditions and not just struggle to keep your head above water but actually make money, then check out Stoic Financial Freedom. And once again, as a special thank you to the viewers who helped me build Stoic Finance all these years, we put together a condensed version of the course tailored specifically towards investors and my subscribers at a fraction of the full price. So click below to learn more and join Stoic Financial Freedom. Or if you want to learn about Michael Burry of Big Short fame's thoughts on this market, then check out this video here.